Ladies and gentlemen, good day and welcome to Solex Energy Limited's Q3 and 9 months FY26 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Hiral Kenia from EY LLP. Thank you, and over to you, Hiral.
Thank you so much, Michelle. On behalf of Solex Energy Limited, I welcome you all to the company's Q3 and 9 months FY26 earnings conference call. To discuss the performance of the company, we have with us from the management team, Mr. Chetan Shah, Chairman and Managing Director, Mr. Anil Rathi, Non-Executive Director, Mr. Vipul Shah, Non-Executive Director, and Mr. Hemal Kachiwala, CFO. Before we proceed with this call, I would like to draw your attention to the fact that today's discussion may contain forward-looking statements that are subject to various risks, uncertainties, and other factors which will be beyond management's control. We kindly request to bear in your mind that there might be some uncertainty while interpreting such statements. We will now start the session with opening remarks from the management team. Afterwards, we will open the floor for an interactive Q&A session. I will now hand over the conference call to Mr. Chetan Shah for his opening remarks. Thank you, and over to you, sir.
Thank you, Hiral, and a very good evening to all of you. Q3 and 9 months for financial year 2026 have been defining period for Solex Energy as we transition into our next phase of scale. During the quarter, we successfully commenced commercial production of our 2.2 gigawatt solar PV module facility at Satkeshwar from November 2025. This is a major milestone in our growth journey and significantly strengthens our manufacturing capabilities. Although the ramp-up of new facility enhances the company's manufacturing capability and prepares its greater scale. During Q3, the initial phase of commencement of the new facility led to lower revenue recognition, resulting in higher fixed costs, which affects margins as utilization level increases in Q4. The company anticipates that operating leverage will help normalize margins in the coming quarter, that is Q4. The demand momentum remains strong across IPP and C&I segments, particularly for high efficiency N-type TOPCon G12R modules. During the quarter, we secured a 544 crore order from group entities of the Delestra Group, with execution scheduled during February to November 2026. We also received 289 CR order from reputed IPP for N-type TOPCon modules. These wins reinforce our growing acceptance in the premium N-type segment. Our N-type and particularly G12R segment. Our diversified strong order book and visibility now exceeds 4,000 crores, including EPC orders, providing healthy execution. On the strategic front, we continue to progress on our Vision 2030 roadmap. Our R&D partnership with ISC Konstanz, Germany, will accelerate next generation solar cell development, including TOPCon upgrades and rear contact technology. We also unveiled India's first rear contact solar module, TAPI rear contact, TRC, with commercial production targeted by FY27. In parallel, our collaboration with Malaysia-based TT Vision will enhance automation, process optimization, and engineering excellence as we scale. From an industry standpoint, the recent Union Budget 2026-27 has also provided strong structural support to solar sector. A budgetary allocation of 30,540 crore has been made for solar energy schemes, reflecting a 32% increase over FY26 revised estimates. The PM Surya Ghar Muft Bijli Yojana has been allocated 22,000 crore for FY27, a 29% increase, which we believe will accelerate rooftop solar adoption. Additionally, 5,000 crore has been allocated under PM Kusum, and we expect meaningful scaling up of agri-photovoltaic projects in India, a segment that still holds significant untapped potential. These policy measures strengthen long-term demand visibility for domestic manufacturing like us. With strong execution momentum backed with industry tailwind, we are swiftly marching towards achieving 1,000 crore revenue and remain confident of closing financial year 26 with revenue in range of 1,700 to 1,800 crores. As capacity utilization improves and operating efficiency stabilizes, we expect margin normalization alongside revenue growth in this financial year. Currently, Solex operates a solar module manufacturing facility in Gujarat with a capacity of 4 gigawatts. As a part of its growth strategy, Solex intends to increase its total module capacity to 10 gigawatts by 2030. Additionally, the company is planning to establish 2.2 gigawatt N-type TOPCon plus solar cell production line, targeting to begin operations by year 2027. Additionally, Solex plans to develop upstream capability, which includes 10 gigawatt of solar cell manufacturing by 2030, 2 gigawatt of ingot and wafer production in the coming years. This initiative will enable Solex to evolve as a fully integrated solar module manufacturer. Further, the company is also exploring opportunities in BESS, that is a battery energy storage system. Considering the current movement in India by all states and the central government, BESS is going to be a next game changer for solar and renewable energy business. So as a Solex, we already started exploring possibility and opportunity in manufacturing of BESS solutions as a part of our sustainability and energy transition strategy. So in no time, we will be able to decide what kind of manufacturing and what scale of manufacturing that we intend to do in BESS segment. With added manufacturing capacity, strong order inflows, a growing share of high efficiency N-type modules, and global technology partnerships, the company is well positioned for sustainable growth and long-term value creation. While making a significant contribution to India's clean energy transition, I will now hand it over to our CFO, Hemal Kachiwala, for detailed review of the financial performance. Thank you.
Thank you, Chetan sir. Good evening all. Let me briefly walk you through the financial performance for Q3 and 9 months FY26. For 9 months, financial total revenue stood at 7,351 million, registering a robust growth of 79.3% year-on-year. EBITDA increased by 72.5% year-on-year to 881 million. Profit after tax grew by 45.3% year-on-year to 394 million. In quarter 3 of FY26, revenue stood at 3,194 million, reflecting a strong 135.3% year-on-year growth driven by improved execution and demand traction. EBITDA for the quarter was 272 million, with PAT stood at 89 million. As mentioned earlier, margins during the quarter were impacted by higher fixed assets following the commissioning of 2.2 gigawatt facility. As utilization improves and volumes ramp up, we expect operating leverage to support margin recovery over the coming quarters, that is Q4. Our balance sheet remains aligned with our expansion plans, and we continue to focus on disciplined capital allocation, working capital management, and strengthening our manufacturing integration strategy. With that, we open the floor for the questions. Thank you.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. To ask a question, participants connected through audio call may please press star and 1 on the touchtone. If you wish to withdraw yourself from the question queue, you may press star and participants connected online may use the raise hand option. You can please raise your hand to ask questions at this time. May we request you to kindly use your handsets while asking a question. The participants for who are connected on audio. Ladies and gentlemen, we will wait for a moment while the questions are sent.
Here, can somebody coordinate the question? Mr. Tushar Jani has raised his hand.
Yes, sir. We will take him. We'll take first audio question from Aman from Augmenta Asset Managers LLC. Please go ahead.
Hi, sir. Thanks for the opportunity. So firstly, given that we have highlighted that because of the recent capacity expansion, we are seeing some upfront cost that is hampering the margins. So on the full year basis of whatever we are guiding of, let's say, 1,700 crores of revenue. So first of all, what kind of margins we expect to close at? And secondly, also, can you just highlight more on what happened during this quarter? Because our gross margins have also taken a massive hit. And thirdly, your plans on the cell manufacturing side of the things also. Where are we in terms of all the finalization and everything? And given that we are guiding for commercial operations from FY27, so some highlight on that would also help.
So, as you have informed, initially what we have targeted was the line 3 and 4 will be operational from October, beginning of October. But as we have mentioned earlier, that because of extended monsoon, the production capacity started late, and then again, you will outfind that it takes time to ramp up. So practically full-fledged production for the line 3 and 4 up to the optimum level has started from December. So all fixed costs relating to the line 3 and 4 were there. Then the interest cost, depreciation and everything was there. So that has impacted the profit. Secondly, the same extended monsoon has impacted our EPC business also. So all the projects are running 2 to 3 months late because of the monsoon, and that revenue also. So we have a target of around 120 to 130 crores of revenue from the EPC business for the full year. So that also will materialize in the last quarter four. So combined, these reasons are there, which has impacted the profitability, and with the revenue being booked. Plus, as you are aware that we have major clients who are big IPPs. So there, once the production is ready, but they have their testing and the minimum order quantity which is to be dispatched. So all these things, process and everything are ready. And keeping in the same momentum, this maybe by 15th of this month we are crossing 1,000 crores. In the balance, the orders and everything are ready for dispatch, and their inspection and everything is going on. So with that, we are on line of achieving what estimates we are given. And when it comes to the net profit margin, again, we are very much confident that these 3 months, the all fixed expenses remaining the same, the incremental jump what we are seeing in the revenue, we target a PAT of around 6 to 8%. Anything else, if it is left in the questions, you may please ask, because multiple questions were asked maybe. Any other question? Yeah, next question, please.
Hello.
Thank you.
Yeah.
Sir, give me a moment. I'll just unmute that part. I think he had more questions. Aman, I have unmuted you.
Sure. Sir, actually, I wanted to ask you that on full year basis, we are estimating the PAT margins to somewhere between 6 to 8%, right?
Yes.
Okay. And sir, secondly, I get it that because of ramp-ups in your production and everything, we have to bear upfront fixed cost. But was there major inventory build up in our books or something like that, looking at the gross margins, trying to understand that?
Yeah, so in fact, we have a finished good of almost 150 crores of finished goods is there on December 24th, and raw material of almost 200 crore, keeping in line the orders we have in hand. So fortunately, the price escalations of raw material has not impacted us much because for this financial year, so we have sufficient quantity of raw material to execute the orders we have for the last quarter. So we have most of these orders, what we have right now are the larger orders, I mean the big ticket orders. So it has a process. So the FG is ready, production is continuously, we are operating 24/7, unstoppable. And the execution basically, it is a site-wise execution from the large client. So the moment happens, that's the reason we say all the moments will happen in Q4. And we are almost crossing 1,000 CR as of now. And in next 45 days, coming 45 days, we'll do revenue of anything from 70 to 1,800 crore. So that is how the moment is. So it is just a matter of moment moving out the materials to the client. And so they have those audits and pre-dispatch checks and those things are going on. So this will happen now. There's minimum dispatch quantity also they have. So right now, 10 megawatts, 20, dividing upon it goes up to 50 also, right? So everything is lined up. So it is, yeah.
And so secondly, are we on the cell line thing? Are we expecting delays in setup because looking at the timeline and everything, and we have not yet announced that we are starting the setting up of cell line or something like that. So on that front, if you could highlight a bit.
So we had finalized one land, but there was some problem in getting the GPCB and the environment clearances. So we had to relook for land. And Gujarat is a very industrial state. So finding a big parcel of land and with the required power connection and water. So we are on the verge of closing the land, and shortly it will be in the public domain. Meanwhile, we have worked completely on the technological side, vendors, the discussion with the EPC, construction phase, everything. So a lot of homework and everything is been done. The zero date, so whatever delay is there, which we have covered with you. Yeah, basically our approach is different. As I mentioned earlier in the call also, that we are on technological front, on equipment front, we are closing everything. And land, as Vipulbhai mentioned, it has its own challenges, and we do not want to get into the situation where we purchase the land and then we get different surprises for the electricity board, water, pollution control and everything. So we are ensuring all those clearances before we start actual work at our land parcel. So we are not late, we are as per our timeline. In fact, if we are not announcing, still the work is going on. Our announcement will happen once we have something on, something to be shared with you. We'll definitely come back and we'll announce it. But for cell line, 2.2 gigawatt, we are on track right now.
Okay, sir. Okay. Thank you. Thank you so much.
Thank you. A reminder to ask a question, audio participants, press star and 1. And the participants who are connected online may use the raise hand option. We'll take the next question from Tushar Jani, who is connected online. So you may please unmute yourself, introduce yourself and your company's name and proceed.
Yes, hi sir, this is Manan here from Money.
Hi Manan.
Yes, hi sir. Sir, I wanted to understand that your gross level margins, so as the earlier participant was also mentioning, our gross level margins have contracted substantially from almost 32% to the 17%. So what led to this sort? I mean, I understand the manufacturing overheads, but at the material level margins, this is a sharp correction.
Actually, if you see the last month turnover, like what we said, last quarter it was a lot of business was there for the EPC business, and EPC margins are more. So that EPC margin is the turnover is shifted in the last quarter. So including of the EPC margin and everything, I think so things will be at the normal pace. So if you compare year-on-year figure of 9 months, it is very much in line with the very less difference between the 9 months completing December and December 24.
Should I look at the standalone numbers then? The standalone numbers will not include the EPC business, right?
Yes.
Okay. So at standalone level, you are saying the margins are at par? Y-on-Y or sequential?
Raman, lot of fixed overheads.
No, sir, that's what I'm saying. I'm not talking about the fixed overhead, sir. I'm talking about your material margin.
Yeah, so material 2-3% impact. But for the entire quarter, we have the required inventory with us. And all the rates with the suppliers are fixed, and the same way we have the price book for our sales also. So that everything is together, we are confident that we will achieve the numbers what we have targeted for March 31st.
So let me try and ask differently. The contracts that we've won, are these fixed price contracts or any variation in the raw materials that is there that can be passed on to the client? So because in the recent past, there has been substantial inflation in the raw materials. So is that the reason why the margins are lower, and going forward also they are expected to be lower, or this is a one-off or something, and whether they can be passed on to our clients?
Yeah, so basically the kind of orders that we are having right now, they are all like fixed price orders, and then we have secured the raw material also. So we are not affected by the fluctuation of raw material prices. And for this year, for next year onwards, we have to renegotiate certain orders and contracts for the upgraded pricing, or maybe if there are changes in a raw material cost, if there's a downtrend in the raw material cost, the effect will be appropriately. But for FY26, whatever orders that we are working, we have secured all raw materials much before this price increase. So we are not impacted by this. None of the orders are impacted by the price increase or the margins.
Okay. So the 4,000 crore order book that you are talking about, this has to be renegotiated based on the current price.
Some of the orders are already having a sale price as per actual. So whenever we purchase sales for those orders, they will have to pay accordingly.
Okay.
Some of the orders we might have to go back and renegotiate because the prices are increased. It is too much increase in the prices. So there are certain projects they are reworking on their feasibility of the projects. And they are working with their bankers also for the change in the project cost. So
what kind of inflation has been there in terms of, say, raw material?
Like if I have to mention the sale price increase, then sale price increased by almost 110 to 20%, 110 to 120%.
Oh, okay.
So, after Chinese holiday, that is in month of March, we will actually come to know about what will be the price trend in coming 6 months. That is from March to next September or August or September. So that is how the trend is currently. The situation is.
Okay. And what percent of this order book?
Because of silver, the ribbon price has also increased because all the ribbons are coated with silver. So that price also impacted, and of course the measure is the sale price, which is increased by 110 to 120%.
Okay. So what percent of this order book will have to be renegotiated?
That we will examine this because at present all major MSAs most of the MSA and orders are with dynamic pricing for sales. So it will not be impacted, but we just have to go back and recheck about their project schedule. Some of the customers, they may defer their plan by a couple of months and wait for some price reduction from the sale. So this happens. But overall, for FY27, we have a clear projection for the production and dispatch.
Okay. So this order book also largely our clients have also confirmed PPAs signed?
Most of the PPAs are already signed. Some of them are waiting for the connectivity confirmation in other states. So, none of these projects are at a risk.
Okay. Understood. In quarter two also, we had around 150 crores of, inventory lying, which was rolled over to this quarter because of monsoon. And in this quarter also, we are having a similar issue. So, I mean, is there any other execution challenge because of which, the offtake is not happening, or?
So basically what has happened, quarter two was majorly the monsoon. Quarter three also, there was a major impact of monsoon because the monsoon continued till the first week of November. At the same time, our line 3 and 4, our 2.5 gigawatt capacity also got into the production in November. So, the inventory, you can imagine, like if the 2.5 gigawatt machines are become operational, what kind of inventory which is being piled up. And all customers are now examining their goods, and they are doing pre-dispatch inspection, and then, we are clearing goods now. So it is not something which is abnormality. It was just the addition of a production line with the backlog of the previous quarter inventory. And the dispatch didn't happen because of the large project, the sites were not ready. That I already mentioned in our previous call as well.
Okay.
And none of the orders got cancelled or none of the orders got delayed. They all are committed to close everything before 31st of March, because they have their own target of commissioning of project and booking this project in their books before 31st of March. So nothing is going to get delayed.
Like one customer, his dispatches were delayed, but they have paid us 100% money in advance, so almost 400 plus crores. They have paid us advance, which is lying with us because of the delay of their dispatch. So, like the question what you are saying, why the inventory of the second quarter got split to third quarter, is because their sites were not ready. But fortunately, they have paid us the entire amount. If the single party has paid us more than 400.
No, I understand the question. Again, the question was because again in quarter three we have similar number of. So ideally, I would have thought that quarter three, whatever was to be delivered in quarter three plus that 150 would have been delivered, but that doesn't seem to be the case. So that is why the question.
Problem was the customer side, not from our side. And give that support, he has already paid us the money. So there is nothing like that he's going to cancel the contract or anything like that. So it is just his sites are not ready, but to compensate, he has paid the money in advance.
Understood. Lastly, on the sell side, any update on the funding? When are we expected to close on the funding for the cell line? I understand land we are shortlisting and we are in process, but also on the funding of the overall capex, where are we? Where do we stand?
We're expecting some term sheets from investors. So we are exploring 4-5 different options. So as per our bankers, we are expecting term sheets, tentative term sheets in the next week, for an amount of around 300 to 400 crores.
Okay, thank you. I'll get back in with you.
Thank you. Participants who wishes to ask questions may please click on the raise hand icon. You may also press star and 1 if you're connected through audio. A reminder to all the participants that you may please click on the raise hand option to ask questions at this time. Participants who are connected on audio may press star and 1 on their touchtone phone.
So we'll wait for a minute or two.
Yes, sir. Surely.
So in the interim, I want to ask If you can just highlight about how we are exploring about the BESS thing.
Yeah, so basically the kind of BESS policy, all the states are working on and they're coming up with the BESS policy. Even the central government, I mean, MNR is also working on BESS support and BESS policy. Even Rajasthan has already announced BESS policy and they've made it mandatory of BESS for up to some percentage. So I think the BESS is going to be a next game changer in renewable space, and it will solve a lot of teething problems which we are facing right now in terms of the solar generation in a daytime, and then absorption of solar power in a daytime has become a challenging, and then there are no storage solution which we can feed to the grid in the night time, and we can utilize the grid by 24/7. So with BESS, it will solve this problem. And so I think I am looking forward to have the solar business to double up with the BESS, because all the BESS solutions will require solar panels and solar power plant to charge those batteries in a daytime and feed to the grid in a night time. Apart from these, the kind of data center which are coming up in India and internationally, all data centers are running on BESS and charged with the solar. So I think in a long term, there is a great visibility for solar and BESS solution. So Solex, our strength is the manufacturing, so we are exploring now possibility, and we have initiated discussion with the technology partners for the manufacturing of BESS containerized solution, large size kits. So we will come back once we finish our study and build our business plan. We will definitely come back to everyone and then we share.
Okay. Any target dates, like any target period that we are looking forward financial year 27 or financial year 28 for BESS opportunity?
BESS opportunity is basically that's coming up that will start. Actually, it will start in later part of the FY27, which is maybe the December 2026 or January 2027. It will start. Journey will start, and I think it will pick up in the later part of of 2028. So I suspect. I mean I foresee the BESS at a peak in somewhere about October 2028 and all. So I think it's a good time to prepare for entry into the BESS with a good technology partner and good technology, because it's not just battery. There is a lot of software and the management of batteries and safety and a lot of things are there. So we are in discussion with leading companies into this space to bring them with us into the manufacturing.
So we can have AK.
Thank you. The next question is from AK. Please introduce yourself with your company's name and proceed with the question. Sir AK, you have unmuted your line. Please proceed now. I'm sorry, if you're speaking right now, you're not audible. Sir, we are unable to hear you if you're speaking right now. Please connect with your audio.
Next participant, please.
The next question is from Gaurav Ruparelia. Please introduce yourself with your company's name and proceed with the question.
Hi, Gaurav.
Gaurav, please proceed.
हेलो।
Yes, go ahead.
Please proceed.
चेतन भाई, एक बार आपने कहा था कि चाइना मेक्स फॉर वर्ल्ड एंड वी मेक्स फॉर चाइना, तो इस पे हमारा अभी क्या स्टैंड है और हम किसके लिए बनाते हैं?
करंटली हम जो मैन्युफैक्चरिंग करते हैं, हमने पहले ऑलरेडी बताया था कि हमने जिंको के लिए मैन्युफैक्चरिंग किया था इंडिया में, इंडियन क्लाइंट्स के लिए। अभी हम लोग लॉन्जी के क्लाइंट्स के लिए मैन्युफैक्चरिंग कर रहे हैं।
ओके, और ये 4000 करोड़ में उसका कितना ऑर्डर बुक है?
काफी साइजेबल ऑर्डर बुक है। इट्स ऑलमोस्ट अभी तक का जो क्लोज ऑर्डर बुक है विच इज 1.2 गीगावाट, और बाकी कुछ ऑर्डर्स एमए से साइंड है या तो अंडर डिस्कशन।
ओके, तो बैक कॉन्टैक्ट में लॉन्गी का नाम सबसे बड़ा है, तो आगे जाके हम बैक कॉन्टैक्ट भी उसके साथ बनाएंगे, उसके लिए बनाएंगे?
वो फ्यूचर है हमारा ऑलरेडी। जैसे हमने लास्ट अक्टूबर 2025 में दिल्ली में हमारा इंडिया का फर्स्ट बैक कॉन्टैक्ट मॉड्यूल, रियर कॉन्टैक्ट, वी कॉल इट रियर कॉन्टैक्ट मॉड्यूल, तापी रियर कॉन्टैक्ट मॉड्यूल हमने लॉन्च किया था। सो हमारा इंटेंशन ऑलरेडी क्लियर है दैट हम आगे जाके बैक कॉन्टैक्ट में बहुत जल्द से जल्द जाएंगे एंड विल बी लीडर इन बैक कॉन्टैक्ट ऑल्सो।
ओके,
अभी
बैक कॉन्टैक्ट
का ही चल रहा है। बैक कॉन्टैक्ट टेक्नोलॉजी जो है अभी सारे टेस्टिंग में है मेजरली, और हमारा भी सर्टिफिकेशन वगैरह जो है वो अपना प्रिपरेशन चल रहा है, तो हम लोग जल्द से जल्द इसमें आ जाएंगे। जैसे हमने ये हमारे ये कॉल में भी हमने बताया है कि बैक कॉन्टैक्ट मॉड्यूल हम लोग ये FY27 तक हम लोग लॉन्च कर देंगे। सेल मैन्युफैक्चरिंग में भी हमारा आगे ऑलरेडी डिस्कशन है, टॉपकन के बाद में हमारा नेक्स्ट जो एक्सपेंशन होगा वो बैक कॉन्टैक्ट में हो सकता है। एंड दैट इज द रीजन हमने ISC Constance, we are the only Indian company to collaborate with the German R&D institute ISC Constance. They are the pioneer in developing the back contact technology, and they have in fact provided this technology to the Chinese. So we have collaborated with them and they are helping us to develop back contact solutions, module and cells.
ओके, थैंक यू चेतन भाई।
Thank you. Participants who wishes to ask questions may please click on the raise hand icon. You may also ask your audio questions by pressing star and 1 on your touchtone phone.
Can take AK.
Mr. AK, I have unmuted your line. Please introduce yourself with your company's name and proceed with your question, sir.
There are multiple login with the name of AK, and so I do not know. There are 3 login with AK, 3 and 4.
That is correct, sir. In the meanwhile, can we take the next question?
Yes, please.
The next audio question is from Amit Kumar from Bansal Family Office. Please go ahead.
Hi everyone. So my question is, the first question is, the module capacity is currently 4 gigawatt, and what were the Q3 utilization level by line and how are they trending in Q4?
You know, line 3 and 4, they just got ramped up in the month of November. So full utilization was there in the month of December. The last quarter, we are targeting of almost 70% of utilization.
Okay, got it. There is one more question as well.
At present, we are working 3 shifts, including Sundays.
Got it. So there is one more question as well from my side. There are 2 schemes, PM Surya Ghar Rooftop Yojana and PM Kusum allocations. So how much the pipeline is addressable by Solex in FY27 and beyond?
See, our major order books are from the IPP. So these IPPs are not working on these projects, PM Suryagar and PM Kusum. So our order books majorly, 80% of our order book is from IPPs. They are working on the large scale project, gigawatt scale projects. So at present our focus is on the IPPs and PM Suryagar and PM Kusum. We have almost about 10% coverage of our total revenue from these fields.
Got it. Sure. Thank you. This thing from my side. All right.
Thank you. Please click on the raise hand option to ask questions. You may also press star and 1 on your touch-tone phone if you're connected through audio.
We can try one more time, otherwise we can conclude after this.
Sure, sir. A reminder to all the participants that you may please click on the raise hand option to ask questions. Participants who are connected on audio, they press star and 1 on their touch-tone phone.
We can conclude, sir.
As there are no further questions, I would now like to hand the conference over to the management for closing comments. Thank you, and over to you, sir.
So thank you very much for everyone for attending this. So we are always available for any questions we can answer. Thank you. You can shoot your queries on email. We'll definitely answer.
Thank you so much.
Thank you, members of the management. On behalf of Solex Energy Limited, that concludes this conference. Thank you for joining us, and you may exit the meeting now. Thank you, sir. Have a great day.
Thank you.
Goodbye.